Hello, everyone. My name is Ava Jenks,
I'm Samantha Settle.
I'm Dana Norris.
and it's thanks to companies like Micron Technology that we can complete our online degrees and also give this presentation while we're physically located in 3 different time zones. And with that, we're excited to share with you our analysis and valuation of Micron Technologies.
Micron Technology began in 1978, specializing in semiconductors. The company was started by 4 people out of a basement in Boise, Idaho. Their company built their first fabrication plant in 1980, and by 1994, they had a spot in the Fortune 500, and they grew into a leader with their technology innovations, partnerships, and acquisitions around the world. Today, the company is a world leader in providing innovative memory solutions, continuing their legacy of providing significant technology advancements. We use Porter's 5 forces to analyze Micron as a company. And so starting out with supplier power, the bargaining power of suppliers is crucial for Micron technology as the semiconductor industry is highly competitive. Due to the competitiveness of the industry, Micron has established strong relationships with their suppliers to ensure the supply chains are reliable and continue. For buyer power, large volume customers like original equipment manufacturers or OEM and large data centers are very high. These buyers make up the majority of Micron's customers, and these data centers typically make up roughly 30% of Micron's revenue. Customers with the ability to purchase larger quantities typically negotiate favorable terms. There was about 20% average selling price decline in 2022 due to the pricing pressures. Large tech companies like Amazon, Apple, and Google are investing heavily in chip research and designs so they can be more self-reliant and less dependent on semiconductor suppliers like Micron. Their 3 biggest competitors are Intel, Samsung, and SK Hynix. These intense rivalries impact Micron's strategies in marketing, pricing, and investment decisions. To maintain a competitive advantage, Micron continues to invest in research and development. Price wars lead to thinner profit margins, and often companies need to optimize their cost structures. Brand loyalty and product differentiation is crucial for Micron to maintain a competitive advantage. For threat of substitution, there are various alternatives in the market, and this poses a significant risk. Technology is always advancing, and these could replace semiconductors. Some of the alternatives are flash storage, solid-state drives, and other emerging technologies. End users shifting to cloud-based computing reduces the hardware demand. Micron needs to continue to invest in research and development to stay ahead of substitution alternatives. And with threat of new entry, it is relatively low because there is such a high capital investment required for high-end manufacturing facilities.
Looking at Micron's balance sheet, Micron's largest reported asset was PP&E at 60.06% of total assets. Their largest liabilities were long-term debt at 21.25% of total assets. From 2022 to 2023, total assets decreased by 3.06 or $2,029 million. This can mostly be attributed to a 2,687 million reduction in receivables. In addition, total liabilities increased 3,758 million or 22.95%. This was mostly due to a 6,242 million increase in long-term debt. Total shareholders' equity decreased 11.60% or 5,787 million from 2022 to 2023. The largest contributing factor was a 6,202 million decrease in retained earnings. The drop in retained earnings can be explained by an oversupply in the market, causing a fall in revenue. Looking at the income statement, Micron reported a sudden and dramatic decrease in net income compared to previous years. Micron reported a net loss of 5,833 million in 2023. The largest expense was cost of goods sold at 52.85% of sales. The second largest expense was depreciation and amortization at 49.91% of sales. In 2023, the market capitalization was equal to 93,528 million, while the book value or total equity was equal to 44,120 million. Micron's price to book value at the end of 2023 was 2.12. The average price to book value ratio in the semiconductor industry was 7.38 at the end of 2023. While Micron's price to book ratio was below the industry average, it was still a 95.21% increase from the previous year.
Micron's return on equity has been very inconsistent over the last 3 years. As you can see, in 2021, it was 14.13, and then it increased to 18.51. And then we had a very sharp decrease to a negative 12.41. The positive return on equity in 2021 and 2022 demonstrates efficiency in use of the stockholders' funds. The large decrease that we see in the return on equity in 2023 is largely due to Micron suffered a $6 billion loss in 2023.
Looking at liquidity, solvency, and the Altman Z-score. First, by looking at the balance sheet, we can see that in 2023, Micron obtained $6 million of new debt. The liquidity is increasing, and we can see that by looking at the current ratio and the quick ratio. Our solvency is also changing, and we can see that by looking at the debt to equity ratio. Going with the Altman Z-score, there was a slight decrease from 2022 to 2023. And right now that is not a big deal because it is such a slight decrease, but it is something to look at and keep looking at in the future years, because if that score does keep decreasing, that can be a sign of financial instability for the company. Looking at credit ratings for Micron, we looked at Fitch Ratings and C bonds. Micron has obtained a rating of BBB, essentially meaning that they have a medium credit quality and a moderate default risk, which is perfectly good for the size of their company. And we also were able to find that Micron is not on the credit watch or downgrade list.
Micron's revenue recognition for 2021, 22, and 23. In 21, their revenue was an increase of 29%, which we did see this in other companies as well. From 21 to 22, another increase, and other companies like Intel also that we kind of analyzed also had that trend. Now, where Micron differed was this steep decrease in revenue change in 2023 with a negative 49%. Other companies, while some of them did dip down, they did not dip to that drastic of a percentage. And so again, I think this is largely due to Micron's losses that they sustained that was more specific to their company and not to the industry. Looking at Micron's accounts receivables, we see that they were down by 3% from 2021 to 2022, and then again, a drastic drop from 2022 to 2023. Now, looking in other companies within this industry, there was typically a little bit of a decrease from 21 to 22, but not near the drasticness that Micron has seen from 2022 to 2023. And we believe that this drastic decrease is largely due to the losses and lower revenue that they have that they received in 2023. And so naturally they would have less accounts receivable. And so it'll be interesting to see going forward in 2024 if the change in accounts receivable continues to go down or increases. Micron's operating expenses. So we can see that there were some changes from 2022 to 2023. Cost of goods increased from 31.7% to 52.9% of sales, indicating higher costs relative to the revenues. Gross profit decreased from 68.3% to 47.1%, reflecting diminished profitability. SG&A expenses increased from 13.6% to just 25.9% or 26% rounded up, suggesting rising operational costs. Operating income went from a positive 31.6% to a negative 28.7% loss, indicating a significant operational decline, which I think that we can conclude that all of that is largely due to the decrease in revenues that they and the losses that they subjected. Now, on a positive note, Micron does actively engage in research and development to maintain its competitive edge in the semiconductor industry. In fiscal year 2022, R&D expenses amounted to roughly 3.1 million, equating to 10.1% of the total revenues. This figure remained stable in fiscal year 2023, despite the losses that the company sustained. Their R&D expenses were 3.1 million, but the common size percentage surged to 20% due to the substantial decrease in revenues. So while they may have some volatility in the losses that they sustained in 2023, they do continue to invest in that R&D to try and maintain a competitive edge for the future.
Micron's inventory includes DRAM and NAND and other memory products, which Micron manufactures in facilities worldwide. Micron switched from valuing inventory using the average cost method to FIFO in 2021. The downturn in the semiconductor industry during the last portion of 2022 and the majority of 2023 caused a decrease in demand and excess inventory. Due to these conditions, Micron days inventory outstanding increased significantly from 2022 to 2023. In 2023, Micron's product prices had to be significantly decreased, which caused a decrease in revenue in all of Micron's business segments. In addition, inventories had to be written down 1.83 billion in 2023 in order to be recorded at their estimated net realizable value. Cost of goods sold is expensed before inventory is sold in order to write down inventory levels, and the decrease in unit price and excessive charges to cost of goods sold caused a stark drop in gross profit margin percent in 2023 compared to previous years. In comparison, a key competitor, Intel, was able to maintain a much higher gross profit margin despite the industry's circumstances. Looking at the tangible assets, during 2023, Micron invested 7.68 billion in property, plant, and equipment. Consistent with Micron's challenges in 2023, the 2023 PPE turnover was significantly reduced from 2022 and 2021 due to the reduction in revenue. Additionally, Intel also showed a lower PP&E turnover in 2023 compared to previous years. Micron has created a 2023 restructure plan in order to combat difficult industry conditions. Micron incurred 171 million in restructure and asset impairment expenses. This plan included cutting personnel and incurring 163 million in employee severance expenses. The 2023 restructure plan was reported to be substantially completed in 2023. Similarly, Intel reported a 2022 restructuring plan that had a cumulative cost of 1.3 billion by the end of 2023.
Micron's short and long-term debt. So as we can see from the chart below, the maturity of notes payable, there is not a lot of short-term debt. And as we go through the years and our long-term debt increases, and then there's a slight dip in 2028, and then it skyrockets in 2029. So the common size debt is 11.79%. The industry standard is for this semiconductor industry is about 30 to 50%. And again, as we can see, this small portion is short term. Micron does not have any publicly traded debt. And so I'm not sure that they would, due to the majority of their debt being long-term and out in 2029 and beyond, I'm not sure that it would make sense for them to refinance that debt at this time.
For stockholders' equity, we looked at contributed capital and earned capital. So for contributed capital, we figured out that 68.66% of the assets are financed with equity. The majority of the shares that Micron sells and issues are common stock. And Micron does have treasury stock, and in 2023, they repurchased 425 billion, which amounts to about $49.42 per share. Micron does use a shared-based compensation, and they call it Employee Stock Purchase Plan, or ESPP. Employees are able to purchase common stock through payroll deductions of up to 10%. The compensation expense is calculated using the Black-Scholes option valuation model. And in 2023, employees purchased 5 million shares of common stock with a weighted average price per share of $51.93. For earned capital, we computed return on equity, and in 2023, it was negative 12.41%. In 2022, 18.51%, in 2021, 14.13%. Accumulated other comprehensive income is mainly composed of unrealized and realized gains on derivative instruments, pension liabilities, and reclassifying pre-tax losses. Next, we look at leases and pensions. Starting with operating leases, they make up 52.48% of the total leases, and they consist primarily of offices, laboratories, and other facilities and land. The weighted average discount rate for these operating leases is 3.21%. Next, for financing leases, they consist of 47.52% of the total leases, and they consist primarily of gas and equipment leases. And the weighted average discount rate is 3.86%. And the total finance lease liability is $1,281 million. Next, for pensions, so they have a 401k retirement plan, and employees can contribute up to 75% of their eligible pay. And Micron also matches contributions up to 5% of the employee's annual eligible earnings. Micron's contribution expenses in 2023 was $59 million, in 2022 it was $66 million, and in 2021 it was $77 million.
Micron's income tax disclosure and strategies. So as we can see here, we can see the income taxes for year ending 21, 22, and 23. And as a trend, we see that 2023 is largely negative, and the effective tax rate has increased substantially from 2022 to 2023. So there was a pre-tax loss in 2023, as has been the trend through this entire presentation. Tax rate increases from 2021 to 2022 due to geographical mix of earnings against deferred tax assets of 189 million. Micron has their markets are international, not just in the US. And so many of those jurisdictions have some tax incentives that will go through 2034. So that should have some impact on their deferred tax and also income tax liabilities going forward.
Before creating a forecast, we had to do some calculations and create some assumptions. We calculated Micron's net operating assets to be 53,815 million, and the adjusted operating loss was $4,073 million. Using the ordinary least square method calculated using the Stata software, Micron sales growth rate was estimated to be 17.8%. However, for the ROPI forecast, we calculated the average sales growth rate from 2019 to 2022. 2023 was not included in the average sales growth calculation due to the extenuating circumstances in the market during that year. We added 3% to the average growth rates to reflect an expected increase in demand due to AI and technological advances. Using the residual operating income model and the aforementioned assumptions, firm equity value was calculated to be $105,110 million. The stock value per share would be $95.73. In comparison, the actual stock price per share was $102.64, which is $6.91 higher than our calculated value per share. The difference could be attributed to our conservative estimate of sales growth rates compared to the market.
Concluding our analysis, we would normally not recommend investing in Micron at this time due to the substantial loss in 2023 and the current market trends, not knowing how and if the company will rebound. However, in April of 2024, the Biden administration awarded $6.14 billion to Micron under the CHIPS and Science Act and this is largely to bring 40% of the DRAM chip production back into the US. So it might actually be a good time to invest in this company just due to the little more stability of having the government contracts.
All right. This has been our presentation. Thank you for watching.